I want to document my trading journey. So here in my YouTube channel. So if anybody come across it, good and fine. Right, but I want to drop it here in case if I want to come back and refresh on my journey, how I started and everything. So can be able to do so, and it might help somebody out there, a beginner in forex trading. It might help the person. So I just want to talk about market structure. In forex trading, that we have three type of market structure. We have the uptrend and the downtrend market, and during ranging market, which you can also call it consolidation. All right, and in the uptrend market you can call it bullish, while downtrend you can call it bearish movement. All right, so and I want to show us the type of structure we have and how you can identify it in your chart properly. So we'll start with the bullish trend, which is uptrend. So that, and you see that in the bullish market tends to move, then pull back, expand, pull back, expand, pull back, expand, pull back, expand. So in uptrend market, the market intends to be moving upside, right? Tend to be moving forward, up, or breaking structures to the upside. All right, so if you want to identify an uptrend, market must be breaking structures to the upside. So now in uptrend market tend to towards breaking structures, giving us a series of higher high and a higher low, higher high and a higher low, higher high and a higher low. So this thing I'm marking out is the break of structure to the upside, the break of structure to the upside, the break of structure to the upside, right? And this is a basic market structure. This is a basic market structure. Are you getting my point? So now here is, you have higher high. Yeah, let me increase. Okay. You have the higher high, and you also have the higher low. Likewise here, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Alright. This continues until when the market decides to change direction to the downside. Alright, and how you can know a bullish market trend is, first of all, it must be breaking the previous higher high. Now this is market created something like this. Market created something like, what's happening? Market created something like this. And what? sorry for, let me use, okay. So market created something like this, give you a high, breaking this structure, all right, comes down again. Now in an uptrend, the market will not take out this lower high, this higher low. Once market invalidates it and push down, you are what? You are no longer in an uptrend market. Market is giving you what? A change in direction. Are you getting me? So now, the rule of an uptrend market is that market will keep giving us a series of higher high, higher low, higher high, higher low, not breaking the higher low. Now, this is the previous higher high. This is the previous higher low. Now, what market will do that? If market does a pullback, market will expand, breaking this recent higher high, give us a new higher high, then comes back inside this expansion, pick a point of interest in it, then move up again. Now this pullback market is making, pullback is when market expand. Market does not just expand and be going up. No. It will come down, take some liquidity inside this internal leg, internal structure, and have enough fuel to expand again, to break this external. So when market is in an uptrend, its intention is to give us what? A new higher high. So its intention is to take out the previous higher high, create a new higher high for us without breaking the recent lower high, the recent higher low. Sorry, the recent higher low. I hope you're getting my points. Give us what? Reconstruction. 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 It will keep on breaking structures. And now, mind you, there is something I want to say now. If you want to know a valid break of structure in any market structure, that market must close with a body. Now, I'll give you an example. That market must close what? With a body to give us a valid what? Break of structure. A valid break of structure. A valid break of structure. Let's assume that this thing now is in an uptrend, and a market have to take out this. A market have to take out this high to give us a new break of structure. Okay, so market needs to take out this high to give us what? A new break of structure. The market is pulling back to do what? Give us a new break of structure, then continue moving. All right. It must close with a body for us to know that this is a what? This is a valid break of structure. It must close with a body. It must close with a body of a candle for us to know that, okay, this is a valid what? A valid break of structure. So these are the things that you need to be looking out when you are doing what? When you are marking out your what? Your break of structure. But in a case whereby market did something like this, and close here, and close with a wick, note that this is not a break of structure, it's a liquidity hunt. Alright, it's a sweep of liquidity. And what you have to do is you don't need to count this thing as a break of structure. You don't need to count it as a break of structure. For it to become a valid break of structure, it must break this recent high with what? With a body candle. A body candle like this. I get to my point. With a body candle like this, for it to be called what? A valid what? Break of structure. A valid break of structure. Now, this is a swing high. This is a swing high. Sorry. Now, when a market broke a structure, giving us a higher high, then pull back, give us a higher low, then do what? Expand and break this structure now, giving us what? A break of structure. Giving us another break of structure. Now, if you want to enter this market now, if you want to join this trend now, what you need to be looking out for is that this place now will be your trading range. From here to here now is where you will be trading your market. Now, we are sure that we are in an uptrend and market cannot break this low now. It cannot break this low. Alright? It cannot break this low. That is what we are sure of. But the thing is that in forex market, you don't see what you want to happen in the market. You allow the market to do its work. But naturally, this place is supposed to be a protected area. Alright. So what market will do is that it will have to come inside this range, inside this your trading range, and be a valid POI. Then from there, you do what? Boom, create another structure, create another structure for us, breaking this high now. Now, once you break this high now, what happens is that this place now become your new what? Your new trading range. This higher low now become what? Protected area. In a case whereby market have to respect this zone. You have to respect this key level and this higher low. You have to respect it. But in most cases whereby market do what? Violated this place. It broke it. Now break it and close with a full body candle. Yeah, it close with a body candle. Now you are expecting what? A change in direction of the market. What market will now do? It will come back here. Do what? Begin to sell. Begin to sell. Are you getting my point now? Come back here. And now we have what? Change of direction. Now market is no longer in what? In an uptrend. It's now what? In a downtrend. It has changed direction. Why? Because this higher low now, market is supposed to respect it and give us a new higher high, but rather market disrespected it, broke it, and closed with a body candle. Now, in this type of change now, we call a market structure shift. That market is no longer in an uptrend. Is now moving what? In a downtrend. Now let me show you what downtrend market is. Market is when the market start to give you a series of lower low, lower high, lower low, lower high, lower low, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Are you getting my point? Now this is what a downtrend market. Market is now moving what in a bearish movement. It's no longer bullish movement. All right. Now this is what is happening here now. This is what is happening in this place now. Now market is now giving us what we call a break of structure to the downside, no longer to the upside again. All right. No longer to the upside. We have break of structure. We have break of structure. And so the market will continue to give us a break of structure until it got to a point whereby, okay, he said that, okay, I'm ready to change direction again. And how to know that market have changed from bearish movement toward bullish movement is that market we have to take out this lower high, this recent lower high in a downtrend. Once you take it out, close with a body, comes back, do a retracement, a pullback, go up. Now you know that market have changed what? Have changed direction. So we now see that this is where market changed direction toward from bearish movement towards to a bullish movement, and we now continue with what? With a break of structure to the upside. A break of structure to the what? To the upside. Now what's happened now? This place now become a protected area. The market will come inside this range, pick a POI, then give us another break of structure. Are you getting my point now? So these are the two type of market structure we have. Then the next one is we have consolidation. Market tend to be doing what? Giving us equal high, equal low, equal high, equal low, equal high, equal low, equal high, equal low. Now mind you, in this kind of scenario now, it's not advised that you enter a market. It's not advised that you trade this kind of movement, because at the stance now you don't know the direction of the market. Market is not moving, it's moving in an equal high and equal low. Now what you should be looking out for is when you see something like market to come here and do what? Break out. Market to come and break out, taking out all this liquidity here, taking out all this equal high here, take it out, then come back here, pick a POI, then move. Then you can now join the market. Alright, and sometimes market intend to do something like this. Break out, take out this equal lows here now, do something like this, come back here, then boom, start to sell. And once you see something like this now, know that okay, market is now bearish, I can start to sell. Or when you see something like this, take out this equal high here, takes out all this equal high here. Okay, you know, okay, market is giving me a sign that okay, it's moving up. So what I have to do is that I'll have to wait for what? A retracement to a valid POI here or a breakout block. We still come back to that place. So I understand that okay, the market has breaking down this place. Now what I'm expecting that I'm maybe the market will come and give me a pullback. When market give me a pullback, I will now buy from here to the upside. So this is a consolidation market. This is a bullish market uptrend, and this is a downtrend market. And this is a downtrend market. Market to give you a sense of lower high, lower low, giving you lower high, lower low, lower high, lower low. Alright. So this is the basic market structure you need to understand as a beginner in the forex market. Right? And this is what I learned from. This is what I learned. The basic things I learned when I started my trading journey. All right. Now, I want to emphasize more on what I have just said now before we go into the chart. Now, I said that bull market, if you want to know a valid uptrend market, the market must be breaking what structures. It must be breaking structure to the upside, and it must be breaking it with what a full body candle. It will not break it with the wick of the candle. See what I mean by the wick of the candle here. This is the body of the candle. From here to here is the body of the candle. Then this is the wick. This is the wick. This is the wick of the candle. This is the wick of the candle. So what I mean is that market must break this, must break this structure now with a body of the candle, not the wick. Not the wick. And another thing I say is that when we have a series of higher high, higher low, higher high, higher low in an uptrend, market it has to respect this last higher low in an uptrend. It has to respect it. But in a case whereby it expand, and when it expand and giving a retracement, a pullback for you to come and buy in a valid period high inside this our trading range, and violated this last higher low and break it and close with a full body candle, with a body candle, know that we are expecting a change in direction. That market is intending to change from bullish to what? To bearish. I get me. And in this kind of situation, now you don't rush and enter the market. Okay, since market have I've seen that market have close here with the body. Now a market is giving what? A retracement. You mistakenly you saw a valid pure high here, and you decided to mark it out. Decided to mark it out to buy. Market can do something like this. It can come here after it have closed with the body like this. When you want to do a replacement, it can come here, take out this thing again, take it out again, and continue its movement. That is market. That is market for you. You don't tell the market what to do. So for you not to fall in this kind of situation, that's why it's advisable that whenever you see a change in direction of the market, wait for a break of structure to the downside or to the upside. Wherever the market change direction to, wait for the first break of structure. Then after you have seen the first break of structure, what happened? You now wait for what? For your entry here. You now wait for your what? For your entry here. Then do what? Then sell. This is advisable. You don't first rush in the first changing direction, because market can just do its thing, then just take it out, begin to buy again. That is market. Alright, that is market. So now after, let us not go waste much of our time. Let's go to the chart. Now, good. Okay. If you check now, this is a series of higher high, higher low, higher high, higher low. Market broke this. Instead of creating a new higher high, come back and break it, then give you a higher, a lower high, a lower low, lower high, lower low, lower high, lower low, lower high, lower low. Change, see what I. But this thing now, if you check it, it closed with a body, then give us what, a lower high, come down here, break again, give us. That's why it's important to wait for what, a confirmation that market has already changed direction. You see it now, comes down here, then what happened? Give us, then see it now. I want to find one that will not complicate, okay? I think that's, yeah, let me find another pair. Which pair am I going to use? Use this pair to explain what I want to so that you can understand and see it very well. So now let me show you an option market. Give us a higher low, higher high, higher low, higher high, higher low, higher high. Come down here, give us the sweep, give us another higher high. We need to, from here, we need to go, to go, to go, to go up, to go up, to go up. Now, here now, if I want to read the general market structure, I want to know the general market structure, I'll go to my daily time frame. Then once I will zoom out everything. When I zoom out everything, I will now know the direction of the market. As you can see, the market is what's moving in an uptrend. And this is the, if you want to know the higher high and the higher low, you need to pick the obvious high and the obvious low. Are you getting my point? Obvious, this is the obvious high, this is the obvious high, this is the obvious low, this is the obvious low, this is the obvious low, this is the obvious high, obvious low, high, low, high, look. Now, I will tell you why we are picking all this external, this obvious high and low, and why we are not picking these internal liquidity in internal structures. And this will be in what, when we are talking about advanced market structure, right? If we start talking about advanced market structure, so you can see the value change of character. Okay, so now what will happen now is that market give us market give a higher high, higher, higher low, higher low, higher. Then do what? Give us what? Sorry, higher high. Then give us what? a higher low, breaking this last month's break of structure on the upside. And once you break this structure, what did you do? It gave us what? It break and started selling to the downside. We see it. I think to the downside. And it's selling towards the downside. Sell, 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 sell. So come here. Begin to sell again, begin to sell. You must say break of structure to the downside, break of structure to the downside, downside, break of structure, each character. So as you can see, the market is not moving as the way we say that it's supposed to move like this. That is why this is just the basic. This doesn't make it basic. When you come to advanced market structure, you are going to see something like this. Market will just give us back something like this, something like this. Then buy, then come back something like this, something like this, something like this. Then buy, come back to something like this, something like this, something like this, something like this, something like this. Then buy. This is the advanced market structure. This is the advanced market structure, but it will be in another section class. I get to my point. Let me know if I can find okay. This is the in an uptrend. It gives us reconstruction and it closes with a body. This is what I'm saying now. You have to close with a body. See. Close with a body. Close with a body. Then what happened again? That it gave us what? Another high. And what happened now? Continue to give us what? Another high. Continue to give us another high. This one gave us what? Another high. This one gave us what? Another high. Breaking structures, the upside. Now, currently now we are what? We are bullish in this market. We are bullish in this market. We are bullish in this market. I get my point. We are bullish. So this is what? Series of higher high, higher low, higher high, higher low, higher high. So what I expect is that the market will come inside this range, give us another higher high, breaking this structure with the body and close, plus another higher high. But in a case whereby you decided to do something like this, push, break this last high, this last higher low, and give us something like this. We are now what? You are no longer in a bullish movement. You are now in bearish movement. Alright. So this is it for today's class. Let me know if I can see a bearish movement. So we can close with it. Okay, let me check USD. Just want to take my time and okay, what happened? It gave us what? Break obstruction to the downside. Hey, see what I'm saying now? Instead of this market to close with what? Okay, this one close with a body, right? So I need what? Close with a body, downtrend market. Market, and what happened? Close with a body here. This is what this is giving us the signal. Okay. The signal that what we are now preparing to push up, push up the market. Alright. Now see what I mean by ranging market. This is a ranging market. It's a ranging market. You see what happened now? It was equal low, equal high, equal low, equal high, equal low, equal high, equal low. Then instead of it to give us another equal low, equal low, equal high, we now do what totally. Now break out from here. Then you do what? Continue what you want to do, then sell. This is a consolidation market, and in this type of market you don't trade it, you wait for it clear direction of the market, right? You wait for a clear direction of the what of the market. So I think this is where I'll be stopping for now till we meet again in advanced market structure.